Hello, this is Brian Resney, President of Resney Wealth Management. I hope you're enjoying these updates that we are sending you, and I hope you're getting a great education from them. I want to talk a little bit more in depth about Resney Wealth Management and about our Global Tactical Investment Strategy. We call it GTOP for short. One of the most important aspects of how we manage client portfolios is how adaptive our strategy actually is. I want to talk a little bit what doesn't work, which I talked about in one of my videos about buy and hold investing or asset allocation. The reason most investors take a lot of risk is because they own assets through thick and thin. Meaning, if you own a bunch of investments and they keep going down, most people have been led to believe you just hang on to these and maybe magically they'll come back. Unfortunately, the same assets that went down in value often are not the same ones that come back up in value. As an investor, what I'm trying to teach you today is about the strategy that you utilize. At Resney Wealth Management, one thing that I learned many years ago is an investment strategy can't be one-sided or lopsided. It has to be adaptive to changing market conditions. Every 6 to 7 years statistically, there's recessions in the U.S. and around the world. If you're a buy and hold investor and you used to own equities, you're one-sided. If equities do well out of recessions, they do very poorly in a recession. So you as an investor have to realize you can't be one-sided or lopsided. Your strategy should be able to easily flow through different changing market conditions, meaning it needs to be adaptive. If you look at all asset categories around the world, not only growth assets, income assets, but safe assets like cash, and if your investment strategy can incorporate those and freely move from growth and income into conservative, you have now a strategy that can be more adaptive to changing market conditions. I firmly believe risk management is an important part of how we manage client portfolios. And one of the things that I see often when people come into my firm to talk to us about not only reviewing their portfolio, but to talk about our services is a lack of risk management. I'll ask people when they come in, what's your risk management strategy or the firm you're currently using? Most people will look at me and say, you know what? We rode the stock market down in 2000, we rode it down again in 2008, and we can't take that roller coaster anymore. I don't blame you. The reason you rode it down a lot is because you didn't know when to sell. I firmly believe an adaptive strategy that uses relative strength, owning assets that are stronger, and selling on relative weakness, assets going down, is a great way to be adaptive to changing market conditions. One of the things you look at when you look at an adaptive strategy is, when do you sell, what do you sell, when do you buy, and what do you buy? Relatively stronger assets historically have outperformed over various time frames, and relatively weaker assets typically underperform over various time frames. Remember, folks, you want to sell weakness, you want to own strength in an uptrend. Sometimes that means going to cash or safe investment alternatives when the investment markets dictate. If you're unsure what to do with your money, maybe you want to get a second opinion about your retirement portfolio, please call my firm. There is a difference. We invite you to experience it. At Resney Wealth Management, we believe in active money management, which includes risk management. Call my firm for a consultation. There is a difference. We invite you to experience it. Make sure you have yourself a safe and prosperous day. But again, call our firm if you'd like that consultation. It doesn't hurt to talk and get a second opinion. Your retirement depends on it. Have a great day.